Right, weekly
I,
meetings.
I
20.
was just about to
Oh,
call you.
all right, 624, last week of the month. Um, I'll be trading the last week of this 2 week order block. There's a lot of great trades, like Kim posted her analysis. Um, any of those USD pairs that we got in last week, they pulled back. This week they'll be going up. I expect the dollar to keep losing ground. I expect EN and GN to go up again this week, and then we can trade those pair back down for that monthly retracement. But anywho, y'all can look at the charts. Hopefully everybody did their own analysis. We have the final video in the Pips of Persia market structure series. It's a little bit long, but this ties everything together. For those of you who have been trading for a while, and maybe you've seen this video before, you should get more out of this video on this time around. That's the goal, at least. All right, let me fire this thing up.
Good morning, good afternoon, good evening, traders. Wherever you are in the world, I hope you're doing well. I hope you're safe. I hope you're healthy. I hope you've got a big smile on your face. And I hope you're catching pips as usual. Pips of Persia here. I just very quickly wanted to start off this video by saying thank you to over 2,300 of you who attended our yesterday's live session. Hopefully you did have some breakthroughs on that call. As I promised, that was going to be a continuation of the market structure series. So this video indeed is the final piece of the puzzle to market structure, where we bring in supply and demand and also how to get those lower time frame entries. I wanted to also give Vishal or VGOK a huge thank you from all of us for joining us on the call yesterday and breaking down your charts on Euro USD and US 30 and helping everyone with a much better understanding of these concepts. If you guys want to check out Vishal, I'll leave the link to his channel down below. He's got some phenomenal breakdowns on his channel and he's going to be posting more as well. So definitely check him out, give him a subscribe, give his videos a watch, as I'm pretty sure you would have your breakthroughs watching his content as well. Now, the video that you're about to see starts from exactly where I start to share my screen. So we jump straight into it, and I'm going to keep the Q&A perhaps for another video, as a lot of the questions that we answered have either been covered in my previous videos or we have already gone through it in this video. So in another video, I might post the Q&A later on, but I want to do a more detailed Q&A later on for a video to answer a lot of your questions. And the very final thing I'm going to say before moving to the video is please be very careful of fake comments, people trying to impersonate myself or other people saying, hey, go and message this person for Bitcoin investments or this and that. Let me tell you this, I don't have an assistant, so I'm never going to send you to my assistant or my investor or anything like that. The only place I'm going to send you to is my Instagram or my website. My Instagram is Pips of Persia, no underscores, no nothing, and my website is pipsofpersia.com. That's it. These are the only two places that you can actually either reach out to myself or check that has actually got anything to do with me. So in no way, shape or form, I'm going to get you to make investments on my behalf or send money to my assistant or, give a WhatsApp number or anything like that. So I just wanted to say that so everyone stays careful of the fake comments. Always double check the channel that's replying to your comment to make sure that it is the main channel or not. And if you come across any of these fake comments, please do go ahead and report them. But without further ado, let's go ahead and jump straight into the recording from yesterday's video, Market Structure Part 3, mixed with supply and demand and Wyckoff cycles. Okay, let's go ahead and jump straight into it. Now, as a very quick reminder, as a very quick kind of refresher in terms of what we were speaking about before, we were in a way speaking about, let's say, a normal trend going up like this, where you have your low, high, higher, low, higher, high. And, within this trend, we would, in a way, be able to go ahead and identify all of these high points as the reversal back down as these areas of minus supply. So naturally, whenever the market reverses, whenever the market does a U-turn and goes back up or a U-turn and comes back down, there must have been elements of supply or demand introduced within that currency pair, within that chart, right? So whenever within this trend going up, even within these little pullbacks, the market is coming back down, these are now your areas of supply or minus supply within the range. And as you can imagine, every single one of the lows that we work with, this would be an area of demand. an area of demand, an area of demand, right? This is very basic, very straightforward. And, even if I go ahead and change it the other way, all the blue zones are now your areas of supply, and all the red zones are now your areas of demand within a kind of bearish trend, right? Very simple and very straightforward. You should all know this in terms of supply and demand. I'm not going to spend any more time on this. Whenever the market reverses, there must be elements of supply and demand. Looking at this from a Wyckofian standpoint, however, if I want to start to draw it a little bit more accurately and a little bit easier, this is how I'm going to start to kind of draw it. And I'm going to keep looking this way just to kind of, look at my notes and make sure I'm not waffling, let me be real. So within a trend going up, this is how we can kind of start to draw it. Let's say you start your accumulation phase, the market goes up, gives you that little distribution, it comes back down, gives you another accumulation, it goes back up, gives you another distribution, comes back down, gives you another accumulation, and so on and so forth. It's the same trend that I just drew from low, high, higher, low, higher, high, higher, low, higher, high, but now in terms of Wyckoff supply, well, Wyckoff accumulation or distribution, which is actually the same as supply and demand. What I mean by that is this distribution that took place up here is the same area of supply that we were talking about. So is this one. These are now areas of distribution at the top of the range where the market is giving you that little retracement back down. Those are areas of supply. And by the way, let me go through everything and then it will make sense. So if right now you're still kind of trying to grasp it, why does this matter? Why is this relevant to the trends? It will make sense. Believe me, there's a reason I've got so many tabs open up there. We'll go through it, right? And all of these areas of accumulation down here, these are now your areas of demand. From a Wyckofian standpoint, a normal trend can look like this: accumulation to distribution to accumulation to distribution. But here's the thing, the trends are never this clean. Let's be honest. They are never this clean. So how does a real trend oftentimes look? A real trend, a lot of the times, can start to look like this. You get your accumulation down here, and the market, let's say, goes up and starts that distribution phase. It comes back down, maybe it gives you a little minor accumulation, it goes up, it reaccumulates before taking that distribution, then it goes higher, give you a little minor distribution up here, maybe it comes back down, gives you another accumulation range and another reaccumulation range over here before going higher. What I'm trying to help you understand is within the same range, you would have areas of distribution. Let me actually start with accumulation as blue. So areas of accumulation, areas of distribution at the top of the range, and the same way that the trend needs to continue, so do these accumulations and distributions. And what I mean by that is you would be able to spot areas of reaccumulation as the market is also going up as well. And vice versa, it goes without saying, when the trend is coming the other way, you would be able to identify areas of distribution as well. So for example, as this market coming back down, you get these lower time frames redistributions within the range as well, as the market is kind of coming lower and lower and lower and lower and lower. Now, okay, so we now look at the same trend from the perspective of normal trend, supply and demand, and then we looked at it from the perspective of Wyckoff accumulation and distribution. And now you can kind of see this trend from the perspective of a reaccumulation and a redistribution. Now, this is where I want to kind of elaborate a little bit more on drop-based drops, rally-based rallies, and I want to kind of speak a little bit about the similarities of this to, quote-unquote institutional concepts, and how practically anything that you've been looking at the chart so far is the same as what the institutional traders do in a way, but just from a slightly different angle. And how I'm going to actually go ahead and describe this is like this. A lot of you have actually traded using rally-based rally or drop-based drop formations. If you don't know what that is, normally that's when the market gives you a little, let's say, move to the downside, a significant drop to the downside. It goes sideways for a matter of a few candles, maybe a few dojis, one doji forming in the middle, a little wick, consolidation region that takes place before this market has the next move to the downside. This is what you call a drop, base, and a drop, and vice versa. You have the rally where the market rallies, goes into that base region, one or two or three small candles, an area where the market hasn't really moved, and the continuation rally away from that level as well. Now, one thing that I need everyone to understand, especially if you're trading supply and demand, is this drop-based drop formation is another version of a redistribution. This rally-based rally formation is another version of a reaccumulation. Not only that, The drop base drop formation is the same as an institutional candle in the middle of the range. It's the same as those lower time frame or redistribution, obviously, that we spoke about. It's the same it's actually quite similar to break and retest as well. Let me put it that way. To an extent, for those of you who are trading supply and demand using rally-based rally and drop-based drops, you'd kind of agree with me when I say this is just a little bit more advanced version of break and retest. We just know more or less exactly which break and retest are going to happen and the ones that don't, right? So this is the very, very first thing that I need everyone to understand. That drop-based drops, rally-based rallies, I'm going to actually start to write them here. Many different names for the same concept, right? So for example, you have a drop-based drop, a DBD. A drop-based drop is the same as a redistribution, right? It's the same as when the market is redistributing going lower. I just hit myself in the nose, but it's when the market is redistributing and going lower, right? It's the same as that institutional candle in the middle of the range. That's the base area that you identify. All of these are the same thing: supply, demand. Obviously, I have to kind of add let's say rally-based rally over here as well, and the reaccumulation as well, and so on and so forth. What I'm trying to help you understand is these are all the same thing. They're just looked at from slightly different angles. And in today's angle, I want to break down supply and demand to the best of my abilities. And wish I was going to go into a lot of detail about indices as well. I'm not going to share anything about that yet. But we want to help you understand that these things look different on the charts, but they're all the same concepts. And how can they look different? Sometimes you would get something like this. You would get one candle pushing down. So you would have, for example, one bearish candle pushing down. And then in the middle, you would have this bullish candle pushing right back up, something like this, right? So bearish candle pushing down, bullish candle, and a continuation of that. You've seen these scenarios left, right, and center, everywhere. That's your institutional range. That's your range in the market where you can in a way see the drop-based drop, your institutional candles, punch candles, whatever you want to call it. I don't care what name you put on it. It's the same concept. That's where on the lower time frames, the market has redistributed and gone lower, which means at that level, there was new supply introduced to the market. I'm going to repeat that one more time. Pay very close attention. At that level, there was new supply introduced in the market. Write that down, put a little pause on it. We're going to circle back to that later. What do we mean by new supply and why does that even matter? By the way, on some other time frames, this can actually look kind of different. You can even, for example, have, let's say, a bearish candle pushing down and let's say another bearish candle straight after that. So without any base in the middle. Sometimes it looks something like this, right? So two bearish candles, yet you would in a way be able to actually see the wick, something like this, right? It kind of would look like that. So instead of it being an actual base in the middle, it's just two candles, one of it wicked down, another one wicked up. But as you can imagine, for this to be created, the markets must have come down, gone back up, and come back down. It's the same thing. It's the identical scenario that's being printed. That's your base. That's your drop-based drop formation. That's your newfound area of supply that's being introduced to the market. That's your lower time frame redistribution. I can put it the other way as well, and everything is going to be switched right to a rally-based rally and a reaccumulation. But it's just the same picture. That's the first thing that I kind of need you to understand. And not only that, by the way, we've got kind of drop-based rallies, rally-based drops, these type of things as well, where drop-based rally-based drop. In these type of scenarios, that would be your accumulation down here. This would be your distribution up there. It's all kind of the same concept, the same thing, right? Now, when we spoke earlier about a new supply and why that supply is important, this is where I'm going to kind of start to speak a little bit more about entries and how we actually go ahead and take entries using supply and demand and using drop-based drops and rally-based rallies. Okay, now let's go ahead and get rid of this. Right. A lot of people ask, maybe what steps do you take to actually analyze the charts? This is what I do. I look at my trend. I look at my supply and demand. Then I want to look at my proof / validity. Then I want to look at my entries. Very simple, very, very, very straightforward. And what I mean by that is this. I look at my trend. So if in the trend we've got this bullish move, excellent. I'm looking at an uptrend. Easy stuff, phenomenal. Then I want to go ahead and look at those areas of supply and demand. And what I mean by that is the same areas that we started to highlight. Those are now areas of supply. These are now areas of demand. But naturally, if I'm looking at a bullish trend and if I know I want to buy it, more so I'm going to care about the areas of demand, not the areas of supply, right? So I want to find which are the key areas of demand for supply. how do we identify what is the key area of supply and demand? And what I mean by that is, how do we go ahead and answer the question as to which institutional candle do we take the trade based on? How do we figure out what is a key area of supply and demand? Looking at this trend, parallel to what we were speaking about earlier in terms of Wyckoff accumulation and distribution and reaccumulation and redistribution, as this trend is forming, chances are we had a minor distribution phase up here, right? So this in itself is actually going to act as a future area of supply. Pay very close attention. This over here in itself is going to act as a future area of supply, which means if supply was introduced once, there's a chance it can be introduced again for this to come lower. Now, if that doesn't happen, it begs the question, why? Why did that not take place? If the market didn't reject this supply and go back down, you should start to now ask yourself the question, number one, why it didn't get rejected? And number two, what was the cause that, in a way, invalidated that level, right? And what I mean by that is this. If the market is meant to start to reject this and go lower, on the lower time frames, you should start to be able to identify your distribution scenario up there, right? It's as clear as day. If we've had supply, top of the range, the market has reversed and all of these things, and as we approach that again, we start to form that distribution, then obviously it's a lot more likely for this to go lower. But sometimes that doesn't happen. Sometimes the market creates very clean reaccumulations as it approaches these areas of demand or these areas of supply or demand, depending on which way you want to break it. And this is where the reaccumulation comes into place. Do you remember we spoke about accumulation leading to a distribution, leading to another accumulation? A lot of the times, you would be able to spot areas of reaccumulation right before the market invalidates a specific area of supply and demand. What I mean by that is this. If this was our previous area of supply, the question is what actually started to invalidate it? In a way, if we approach that level and start to distribute, that means we're introducing supply again. But if we approach that level and we are reaccumulating, what does that tell you? If it's approaching that level and it's reaccumulating, this should scream in your face that there's new demand being introduced. There is a higher probability of this market going higher, breaking above that high, than it is actually rejecting it and dropping lower. And surprise, surprise, those reaccumulations on the higher time frames, they look like base rally formations, where you have the rally, you have the base in the middle, and you have the continuation of that. Now that becomes your newfound area of demand. As simple as that. That's how I look at my supply and demand. So in a way, let's say I'm analyzing this chart. Let me go ahead and take these off. So let's say this is the trend that I can identify, and I want to go ahead and analyze this chart. And I kind of know, obviously, this is, for example, where we are in the trend, where we are in the market. And I can see that we've had a distribution phase up there. And this distribution phase has now led to another accumulation that has, in a way, broken that structure, or a reaccumulation that has broken that structure to the upside. Either way, that area of supply was not substantial. Therefore, it got broken to the upside, right? And I want to kind of ask myself the question as to why. And what is now my new area of demand? Because if the supply was invalidated, that means demand must have been introduced. If the supply was invalidated right over there, that means demand must have been introduced to invalidate that level. Otherwise, it's supply level. You expect it to drop from there, as simple as that. So now I want to start to look at what areas of demand started to invalidate that supply. Very simple and very straightforward. You can find your institutional candles, your area of inefficiency or imbalance. You can start to look at your reaccumulations on the lower time frames, whatever it may be. And once I managed to put my finger on those, once I managed to identify the areas that were in a way sponsoring a specific move, I would want to wait for something called proof of validity, right? This is not really called proof of validity. I'm just kind of waiting for a proof, really. So if I've identified a newfound area of demand, and I'm going to show examples, by the way, for all of these. So if I've identified a newfound area of demand, which has now invalidated the previous supply, this demand, here's the way I want you to look at it. That rally-based rally, that reaccumulation or institutional candle was in a way there to sponsor a break of supply, to sponsor a break of that structure to the upside. So in itself, it has to still prove to me that it holds the weight of a demand, because that demand could have just been introduced by the institutions to get rid of the previous supply, not necessarily for it to hold for future trends. It might not. So what I want to do is I want to wait for some type of a proof of validity. And oftentimes this happens on the lower time frames, where as you get these pullbacks back into these levels, your proof of validity is a break of a minor structure point to the upside. Now that area of demand is deemed as valid. And here, and this is the important thing, right? A lot of you have seen this and now you're confused thinking, yeah, but I've seen that it comes up here, it still reverses and goes back down, even though it's given me that minor break of structure to the upside. I want you to start to look at the key areas of demand or supply. So within this trend coming back down, more than necessarily the exact structure points, we want to look at the important structure points, the ones that you can see that supply was introduced and it has gone ahead and created a new structure point in the market. It's very simple and very straightforward, right? That's the validity of your structure. So that break of that structure to the upside is now going to prove to me that whatever supply we had previously is now invalidated. Chances are we're going to get a retracement and go higher. Trade management comes into this a lot as well, because now you're taking a higher time frame trade based on lower time frame break of structure. So you've got to manage your trades properly as well. I'll speak about that. But again, reiterating on what I spoke about, this in itself wouldn't necessarily be my entries unless I have enough confirmations. I don't necessarily go ahead and enter it there all the time. A lot of the times that would be my proof that, listen, the previous demand that was introduced is still valid. That's your proof. That's your break of the relative structure point to the upside. And it goes without saying, these retracements would be our entries to take this higher. And these retracements, they will line up with the significant areas of supply and demand. What do I mean when I say significant areas of supply and demand? If this market started to create a reaccumulation, as it broke that structure to the upside, chances are it's going to go ahead and react off of that reaccumulation. I'll show you based on the examples. But before we get into the chart breakdown, what's the time? 5:36, yeah. Before we get into the kind of chart breakdowns exactly, I want to elaborate a little bit further on how you would manage the trade here, how you would manage your risk over here, so you can kind of know that a big part of this industry, a big part of trading and investing is managing your investments. Making money is not the most difficult aspect of this business, right? It's really not. It's retaining the capital that's the most difficult. Making money is something that practically anyone can do. I'm going to be real with you. But how many times have you grown an account and then within a few days you've blown it straight away? It's disappeared. It's about retaining the capital. And for you to retain it, you need to get good at managing your trades and managing your risk. A lot of people within these scenarios, they get extremely lost because they want to identify the best risk to reward. They would want to enter it there and then and have a 2-pip stop loss because they've seen that that's possible and they would want to take it to the upside. And you would see that your direction is spot on. So every single time you can identify direction correctly, but also every single time you're getting stopped out before the market moves in your desired direction. I'm going to give you a very simple solution to that. Pay very, very close attention to what I'm about to say. If I know that I want to go ahead and buy this at that level over there, right? Let me change this to blue. If I know that I want to go ahead and buy this at that level, because that's my institutional candle or whatever it may be, I would have one entry that's going to be the biggest stop loss trade, whatever that entry and stop loss is going to be, right? One entry with the biggest stop loss, right? So which means one of my entries is going to be the largest stop and the most minimal possible risk to reward, right? And then I would divide my risk accordingly for the better positions. And here's the example that I would make. Let's say over here, you have an institutional candle in the middle of the range, and you want to go ahead and take your trades based on that. One of your entries could be at the institutional candle with stop losses below that major structure point, and another one of the riskier entries could be the same entries, but your stop losses, for example, at the low of that candle or a little bit below that. And what you're doing in this case is you're dividing your risk into 2 positions with 2 different stop losses, but the same entries. Sometimes it could be 2 different entries, but the same stop losses, 2 different entries and 2 different stop losses. The point is I'm dividing my risk in 2 or 3 positions. So if you normally execute a 1.0, in these 2 scenarios, you're going to do a 0.5 and a 0.5. So the total risk on the account stays the same. Well, obviously, calculate your risks accordingly based on the stop losses that you see over here. So half of your risk and half of your normal risk. The risk on the account stays the same. But what this will stop you from is that element of greed. How many times have you had the major trade play out and you miss out on a 1 to 5 or a 1 to 10 because you were waiting on that 1 to 80? In this scenario, you're going to catch that 1 to 10. So that fear of missing out instantly is going to disappear. You're still going to be in that trade. You're still going to increase your capital, and have that return on investment. And the risk on the account is also going to be the same. So if you're wrong on your trades, you're not going to lose any more money than you're willing to lose, if that makes sense. Your risk stays consistent. And if both of them play out, then hallelujah, right? Phenomenal. You're going to make your money. Amazing. So start to manage your trades properly and start to manage your risk properly. That's point number one that I wanted to mention, that if you look at a chart and you feel like, I don't know where I want to have my entry and stop loss, assume the biggest stop loss and assume the smallest risk to reward. If you're happy with the stop loss and the risk to reward, execute the trade, and then look for refinements. Another thing that I'm going to add to this is areas of target. In this specific scenario, you have to remember where you would want to be targeting, right? Because in this specific scenario, as the market is in a way reversing and going back up, you're taking the trade based on the lower time frame break of structure to the upside. So now, let's say if the bigger trend is on the, let's say, for example, H1, but the lower time frame trend coming back down over here, let's say that's, for example, on the 10-minute time frame, right? If these are the stuff that you're able to now identify, you have to now see that you're taking the trade based on a break above the 10-minute minor structure coming back down, which means you're taking the trade based on a 10-minute breaker structure. The higher time frames could still be respecting the bearish trend that's kind of forming, right? It's a higher probability that it breaks that structure and it's going to go higher, but you have to manage your trades accordingly. And what I mean by that is because you're trading it based on a 10-minute break of structure, your first set of targets would have to be based on the 10-minute time frame. So in this specific scenario, you would have to start to take positions off the table as this market reaches that high, as this market starts to get to the major areas of supply and demand on that specific time frame. Now I'm good with the notes. Okay, so let's start to actually have a look at the charts and have a look at examples for this and exactly how we can, how we have seen the charts move and how you can start to look at the charts from this perspective from today onwards. I'm going to go through a few different examples over here. I'm going to cover a few different things. So we're going to go through Euro JPY. We're also going to cover GBP USD. Obviously, we're going to cover GBP USD and we're going to cover AUD JPY as well. Now, truth be told, I wasn't actually going to go through chart breakdowns myself. I was going to leave that completely to Vishal. But as I was kind of going through some of the past trades and documentations, I came across a few of them that actually applied perfect to this training. So it would have been rude of me to not cover it. Let me put it that way. So let's start off with Euro JPY, right? This is kind of like obviously a very basic one, a very straightforward one, where on the higher time frames you could kind of see those elements of manipulations to the downside. We've taken these lows on the higher time frames. This market has now reversed and has broken above these significant structure points. Over there it hadn't yet, but over there it did. So naturally, the original kind of bias on Euro JPY was bullish. We should kind of be expecting some type of a bullish move. And this is where kind of this first picture comes into place. And this is documentation from some time ago. So we're talking January 12th this year. So around February, March, April, 3 months ago, exactly, more or less. So this is the first picture where this was kind of generally what was identified. The 8-hour time frame is what we're looking at right now. Weekly manipulations of the lows, daily upside and break of structure, bullish. That's exactly what we spoke about. The manipulation of the lows over here, that break of structure to the upside that was taking place right over here, right? That break of that structure point to the upside. Now the market is starting to shift in that higher time frame momentum. And looking at the specific picture that we were analyzing, we can identify this even final trend. So check this out. You can see your major points, your major trend. You can see your little minor trends coming back down over here, right? And then you can obviously see the break of that minor structure point to the upside as well. So far so good. We've gotten exactly kind of where everything that we wanted to get, really. And now check this out. This in itself over here should have proved as an area of supply. Not only that, this entire area up here, this entire level, this is our round off, right? So we have supply over here and we have supply right over there as well. The point is the second circle, the second area of supply is a very substantial supply. This market took time and it did distribute. It was within this distribution phase over there, more or less, right? Kind of turned into a reaccumulation later on. But that is a very strong area of supply over there. So as this now is starting to break lower, as this now is starting to challenge these minor structure points to the downside, the question is, what sponsored that? What took this lower? There's a lot of levels in the middle. I'm going to shift my focus to this institutional candle on the top of that range. It was more or less that candle that was the final push to the upside, and you can see the market completely collapsed before then. And you know why I see that candle as a strong one? Because this market was finding it difficult to break above it. Can you see? It was finding it difficult to approach these levels and start to break above it. It kept approaching it, getting closer and closer to it, even manipulating the highs or creating equal highs, but it most definitely didn't want to break it up until this candle, up until what we started to form over here. An extremely substantial candle over there. The 8-hour institutional candle, such a strong move to the downside over there, and a reversal straight after that. This area is now your newfound area of demand over here. Why? Because this is where we introduced demand. This is where the market makers, or let's say the institutions, were reaccumulating on the lower time frames or pushing the market down to give themselves a better entry points for these buys to the upside. And it was this area of demand that has now gone ahead and crossed above the previous areas of supply. So that area of demand down there, this 8-hour institutional candle, is on newfound area of demand. That is the demand that pushed the market higher than where it was struggling to go above. That's the demand that pushed the market higher than this entire redistribution phase and these institutional areas in the middle. That was the demand that in a way sponsored that move to the upside. So I've got the demand. Now I want to see if the demand is still valid. So what you see over here is what I have written over there. 8-hour bullish. We've got our institutional candle as a point of interest. Remember, it doesn't have to come down there. Pay attention to price action. That's what I've written over there, because not always it will come down there. Sometimes it can reaccumulate and then go higher. For example, when you look at this specific level, when you look at just this picture, there is another level at the top as well, which is kind of quite attractive for entry. Let me see if I can. I don't think I can annotate on the same screen. So let's come back here. Looking at this reaccumulation, if I put this in replay mode, or potential reaccumulation, right? Looking at this structure that's forming over there, this area in itself would actually be an attractive area for buys to the upside. This area would be an attractive area because at the end of the day, you can see your lower time frame trends. You can see this was your final accumulation pushing higher. So I now want to wait for what we call that proof, the validity. If I want to buy it from here, I still kind of need to see my validity. I want to see that that demand is valid. If I want to buy it from down here, I still want to see that that demand is valid as well. In this specific picture, we started to actually form these base drops as the market started to approach these first areas of demand. Can you see how new redistribution was introduced to potentially invalidate that previous accumulation? Looking at this on the 8-hour time frames, or let's say 12 hours, probably going to be the nice one over here. Yeah, these are your candles in the middle of the range. And even looking at this structure over here, you can see that we've taken the highs. It's manipulated the highs. That wick over here, that's taken the highs and it's ready to go lower. Studying this on the lower time frames, I'll leave this up to you guys to do this for yourself. That in itself is now your area of redistribution. If you want to know the date and time for it, roughly we're talking 12th of January this year at around, let's say, 8 p.m. UK time, right? So let's say towards the end of the day. That area is an entire redistribution area. I want to encourage you to go ahead and mark that up and study that for yourself. We've got enough redistribution videos on my YouTube channel as well. But when I start to see things like this, when I start to see on the lower time frames, especially, that we are taking the highs, this is taking the highs, it's manipulating the highs and reversing. It's giving me these pushes to the upside, distributing, taking the highs and reversing, and maintaining the price below as well, not end up going higher. These are now in a way your guidance, in a way that this is probably not going to reverse up there. So I had that 8-hour point of interest in mind, and I thought to myself, you know what, that's a strong area. We kind of need to see proof at that level. So once we approach this level, I want to see the lower time frame break of structure to the upside. I'm going to repeat that one more time. When we approach that level, I want to see those lower time frame breaks of structure to the upside. So I've got my 8-hour marked up, and that was again the picture, January 12th, that was taken. So we've got that point of interest marked up. And now we've gone ahead and have approached that level over here. This second picture is January 20th. So it's just over a week after the first picture was taken. And this is throughout London session over there. So this was in a way where the market started to approach that desired level and started to create the accumulation schematics on the lower time frames. Now, I'm very honest with my markups. I was hoping for a more defined accumulation. I was hoping for this accumulation to look a little bit better and a little bit easier to read. But in reality, it wasn't as easy as I wanted it to be to spot it. And it was something that we would be able to see happen once the market moved away. So check this out. This whole red area down here is that 8-hour point of interest. On the 8-hour time frame, on the lower time frames, you can see the market is trending as it's approaching our POIs. Let me just delete these things that we don't need. The market is trending as it's approaching these points of interest. It's coming lower and lower and lower. And over here, when it accumulated and it took off so impulsively and so aggressively, this is now your bullish confirmation. This is now in a way where the market is telling you, hey, I'm probably going to reverse from this level. So when you look at this picture, this is taken on the same time frame, on the 15 minutes. There is one area that I've highlighted right over there, because this, to me, in my eyes, that was where we introduced the final supply, right where my mouse is. The final supply for this to go ahead and take the lows, go ahead and create that spring to the downside. So a break above that level is going to be a significant one. A break above this level is going to be the significant one. So if I am to take these trades, I have to wait for these lower time frames to break structure before I do it. And when you look at this, this market rallied away from our level. This is now your proof of demand. This is now where the market is saying, hey, that demand is valid. The order flow is valid. We are going to go higher. When I start to see these moves away from these levels, it gives me that confidence. And surprise, surprise, what did that look like on the lower time frames? Let's go back. Remember the area that I just highlighted? So I said a break above where? Right over here. Break above there. What did we do right before it started to break above there? That entire blue region that I've highlighted, that's your reaccumulation range. That's where the market, in a way, created a rally-based rally and started to break above those levels. So when you look at that picture on the higher time frames, surprise, surprise, you would be able to see, well, probably on the hourly a little bit easier, you can even see on the 4-hour your base, and on the hourly time frame, much, much cleaner in terms of your rally-based rally. Now, there's a little bit too many bases in the middle. It depends how you want to trade it for yourself, but on the 1-hour, 2-hour, 4-hour time frames, you can clearly see how it's created the low, reversed back up, started the reaccumulation range, and it took off. It was this reaccumulation that sponsored the entire move to the upside. The market went sideways and it took off. Is it a surprise to see it back down at these levels? Of course not. Of course, that shouldn't be a surprise. And those should be the areas that we would want to look at for our entries. Because now we've seen the demand on the 8-hour institutional candle. We've seen this validity proof. Therefore, we can start to look at our entries up from there. Very simple and very straightforward. These are the steps that you can take. Now, this is Euro JPY. So right over there was hoping for a more defined accumulation, and then right back within. So this was literally where it literally came right back down to these areas of reaccumulation right over there, and it took off. Now, let me go ahead and move on to a couple more. I want to make sure I'm not talking too much so Vishal has enough time to kind of go through his stuff as well. So briefly and quickly, I want to go through GU and AJ, and then this coupled by what Vishal is going to go through hopefully should result in many, many, many breakthroughs. So GBP USD, as a lot of you know, I'm still in sell positions for GBP USD from more or less the top of the range, from that, not that high actually, no, yeah. These are the sell positions that I'm actually still actively within for GBP USD right now. Both of them are still open. A lot of you have seen multiple screenshots of this on my story. I've been documenting these quite well. And the last YouTube video, the second to last one, is actually about kind of the first scenario breakdown as well. So everything is over there for you guys to check it out for yourself if you want. But generally speaking, with GBP USD, let's start off on the higher time frame. So, for example, daily or weekly. I want to actually start off on the weekly time frame. So the weekly time frame was this manipulation of the lows and blah, blah, blah. The market went up, you know, all of these things. I'm not going to speak about it too much more. But check this out. If you were looking at this on the weekly time frame when it was happening, you probably would have actually been looking at sell positions rather than buy positions. I'll be real with you. Why is it taking so long? Yeah, trading view. Let me change time frames and see if it, there you go. So if you were looking at this on the weekly time frame at that time, it probably would have actually looked pretty attractive and pretty good for those sell positions, right? It's struggling to load the weekly time frame on replay, but there it is. So that's in a way your buy before sell candle, your institutional candle on the top of the range that has sponsored this move all the way to the downside. And maybe you were looking at some sell positions over here. But again, pay very close attention. As this market started to reapproach that level, so first things first, the first time it rejected it, it respected the lower time frame trend. It didn't break the trend. The first time it rejected it, it was actually still trending. The second time that it started to approach it, it was sponsored by this rally-based rally. It literally created an area of reaccumulation on the lower time frames, approaching the previous supply. So it shouldn't be a surprise to see this market break above that supply. It shouldn't be a surprise to see this rally-based rally, this area of reaccumulation, sponsor the break higher. And it also shouldn't be a surprise to see the rejections back down to these levels, to see the market want to be pulled back to these rally-based rallies or drop-based drops that are sponsoring a specific break and then moving in that given direction. So that's the first kind of picture I wanted you to see as an example on the weekly time frame. The other, in a way, the other side that I wanted to explain would be the daily time frame from that very, very high. So at the end of the day, over here, we've had supply as well, and the supply has resulted in such a strong move back down. At that area of supply up there, we can expect the market to reverse. And naturally, you've got two areas of significance. You've got this one as your drop-based drop formation. And can you see this is an example of literally what we spoke about earlier? This is still a drop-based drop formation. This is still an area of supply. The market has dropped, has gone back up, and has dropped again. That's the same. I've just identified the wicks, right? Literally the opposite of an imbalance is what I've identified over here. So we've got these two specific areas in mind because it seems to me, number one, it was this area as the high point of supply that sponsored the break below here. And it was this reaccumulation that sponsored the break below there. Or this one, or for example, this redistribution, sorry, not reaccumulation. So either way, those are areas of significance that later on we can see reversals from. But the first area, something interesting happened as the market was approaching that level. Surprise, surprise. It's yet another rally-based rally. You can literally see that on multiple different time frames. You can see two rally-based rallies. Mostly, I want to speak about this first one over here. This one. The market rallied, created the base, manipulated the lows. You see, it's taken the lows over there within this rally-based rally. Within that entire range, is gone ahead, created lows and taken the lows and reversed. That's what that looks like on the lower time frames. That's an area of reaccumulation as it's approaching your supply. If it's reaccumulating, approaching your supply, it's not going to reverse at that level, I promise you. So unless it starts to distribute after that. But now when I start to see things like that approaching that level, it pushes my eyes towards the higher level. And if we are getting those reversals from those higher levels, then obviously I can get into some lower time frame counter trend trades coming back down. Let me not elaborate on that too much right now. I don't want to get into counter trend trading. That'll be a whole other conversation, a whole other training. But very quickly and briefly for GU, this was kind of the buy scenario that was identified. So obviously we got in the sell positions from these high points. I'm not going to even touch on these. There's full breakdowns available for you guys to see. But these sell positions, I wanted to, in a way, eventually look at certain buy positions. And this was one of the first pictures that I started to actually look at on the minute time frame for GBP USD. It wasn't, the entire analysis wasn't based on the minute time frame, but we did start on the lower time frames for those buy scenarios. And this was this range in the market over here. When I started to look at this specific range, it was quite interesting to see what took place exactly over here. There was a reason why I thought to myself, this could be the bottom of that range, the bottom of the market, simply because it was happily trending lower. It was happily introducing supply and going lower. Then all of a sudden it went, nope, and it went all the way back up, invalidated some, minor areas of supply, but it was liking it. It was kind of spending time on the other side of the zone. So it wasn't just the manipulation of the highs for this to kind of reverse and come all the way back down. There was something more to it. So I thought to myself, you know what? This area down here, the highlighted area, is a potential area of demand. And the highlighted area is this one right over here. Give or take this region I highlighted. And the reason why I highlighted this specific region is because that would have been the manipulation of the lows, and that would have been this final area over here that sponsored that move to the upside. And I thought to myself, you know what? This is where we're going to get reversals. I thought to myself, the market is going to give us the reversal at that exact level. Funnily enough, it went below. And I want to also help you to not get caught out on these trades, because we did it. that should not have been your entries over there. This is your proof of demand, or this is your validity. The market's showing that, hey, we have had demand over here, but over here, it didn't necessarily reverse exactly at that level. These wouldn't have been the trades that we would have taken anyway. These trades are invalidated. Well, not valid in my opinion. Heavy counter trend scenarios, you have to wait for the proof and then trade accordingly. So it didn't really matter to me that we reached below that previous area of demand, because it still reversed and it gave me the proof. It was just telling me that, hey, we just wanted to take the other low as well. We just wanted to also grab whatever liquidity was resting below there. So it's still okay. The demand is still valid. And when I see that reversal to the upside over there, it gives me the confidence now on the lower time frames, for example, we can look at this. It gives me the confidence that, okay, this is now valid demand. The market has gone ahead and invalidated many of these specific areas. And this would be kind of before and after type of screenshot. So I simply waited for that break above, waited for that proof in a way. That was our proof to the upside. We had our proof, we had our confirmations. And then if I'm not gonna, let me not go into too much detail about this exact scenario. It's a 5-second entry if I want to be real with you. So it was actually executed based on the 5-second time frame. Take a screenshot of this for yourself, please, to have that so you can see the date and time on the top over there. And you can see the pair, you can see the time frame, you can see the entry and the stop loss, and you can also see the time right before this trade would have been executed. So this would have been the buy scenarios to kind of take to the upside from here. I don't want to elaborate on this too much because I also want to encourage you guys to start to study this for yourself. You have got enough information now to start to look at these a little bit more independently. So anyway, now that you know everything from here, coupled with this screenshot, you should be able to see exactly what I'm talking about. So we've had that, we've had the proof of demand, we've had the move to the upside. That's your entry right over there and your stop loss right over here. I'm going to leave it for a few more seconds if you want to screenshot this. And then I want to go ahead and speak about the final scenario before I go ahead and pass it to Vishal, which is our AUD-JPY. Again, a very old scenario. We're talking about December 21st, something that was documented actually end of last year. But again, something so beautiful that I couldn't really ignore. I wanted to include in this trade and in this analysis. Within the screenshot that you're seeing right now, again, it's very similar to what we looked at for Euro-JPY. We have got the bullish trend. We've got these reaccumulations. This is a markup with the reaccumulation. And you can see that the market is kind of going higher and higher and higher. So moving to AUD-JPY. And let me start on a little bit higher time frames. This is where we are talking about down here. So this was in a way a very kind of clean and clear scenario for AUD-JPY. To me, it looked like it was going through this reaccumulation scenario. We introduced demand down here. That was where the market in a way reversed, came back down, introduced demand, and went to create a new structure point, right? So when I see these pullbacks back into these levels, and not only that, we have lower time frame accumulations at these levels, it's now proving that demand to me. So now the market has rallied away, has broken the relative structure points to the upside, and started to create reaccumulations as it's traveling higher and higher and higher. So this over here is this picture, basically. And again, December 21st was when this was actually taken. Now, when you look at this picture, there's practically only one POI that you would look at, which is exactly where it's highlighted, that 30-minute institutional candle in the middle of the range. So I want to go ahead and move this to 30-minute time frame to show you why at the time of looking at the charts, there probably wouldn't have been any other areas of interest to look at, simply because that over here, this was your reaccumulation phase. The market left the reaccumulation, but it did pull back and it created this final institutional candle and off it goes. So in a way, that's the final potential place that this can pull back to. And this entire thing, by the way, this entire range, what is this? This is your, let me actually just keep the blue one. This is your higher time frame rally, base, rally. This right over there. Can you see it? Let's go to daily. Might be able to see it a little bit easier on daily and weekly time frames. Right over there. You can see the markups, the shakeouts, AR, BC, all of these things. So that's now a rally, base rally that has gone ahead and has created the new structure point. So obviously we can kind of expect the market to be reversing at these levels. So going back to this now on the lower time frames, that was what I was waiting to see. I was waiting to see if that institutional area is still valid on the 30-minute time frame. Okay, so when we get this rejection up from here, I am actually just waiting for a minor break of structure to the upside. And this is where it brings me to the final screenshot right over there, literally followed from there. December 21st at 2 p.m. December 21st at again 2 p.m. as well. Literally 2 minutes after I took this screenshot, I took this one to show again. Now I'm waiting for that final minor break of structure to the upside, that 5-minute break of structure to the upside. So let me go ahead and do this 30-minute institutional area that we were looking at, and this is now a final 5-minute break of structure basically. So check this out. This area that we identified over here on the 30-minute time frame, I'm going to show that to you one more time. This area down here as an institutional candle that we identified on the 30-minute time frame, as we were approaching that on the 5-minute time frame, what was it doing? It was introducing supply, and the final supply that was introduced, the final round off that in a way pushed the market lower, took whatever liquidity needed to be taken, and in a way that was our final major area of supply or major area of structure. So I have to now kind of wait for a break above there, and that 5-minute break of structure to the upside is kind of confirming our trades. It's confirming that this market is more likely to go to the upside, more likely to start to actually reverse and go higher and higher and higher. And if that's my break of structure to the upside, looking at what sponsored that, you will always be able to find these rally base areas and rallies that sponsor these breaks of structure. These rally-based rallies turn into future points of interest for entries. And that indeed would be able to be the type of trades that you would take, really. The rally-based rally that invalidated that area of supply on the lower time frames, and now I'm simply basing my trades on that. And let me just take this off very much to kind of make it easier. And this is the kind of final push to the upside from these levels, from that 30-minute time frame that was kind of identified. And you can see around the targets as well. I'm not going to draw my arrow from here all the way up there, right? How do I know the market is going to go all the way up there unless I'm looking at the weekly or monthly or whatever? Normally, it's about how you manage your trades. So I want to be taking the profits relative to the structure, but not all of it. I would keep positions running indefinitely. I'm still in GBP JPY buys from end of January. There's still so many scenarios that we're in from a long time ago. So with that being said, now we've kind of gone through a little step-by-step kind of guide as to what to look at. We've spoken about structure from a supply and demand perspective, rally-based rallies and drop-based drops. And not only that, we've also given 3 examples as to how you can look at your trend, look at your supply and demand, also look at your significant areas of supply and demand that are invalidating the previous ones and basing your trades on that. Trend, supply and demand, proof/validity, and then from there you look at entries. Now, Vishal is going to kind of speak a little bit more about indices and the lower time frame stuff, but honestly, I've been trying to, again, keep up with the chat family. It's so tough right now to kind of be looking at everything in the chat box. I'm trying my best, but it's impossible. There's only one major question that keeps coming through, and I feel like this is the question that so many of you have continuously asked me, left, right, and center. Every single day I get messages on Instagram about this as well, even though I have posted a video, even though I've tried to make it as easy as I possibly can, and that's about our mentorship and courses and all of these things and what we do. Family, I have made this as easy as I possibly can for everyone. All you've got to do is you literally have just got to go to my website, which is pipsofpersia.com, right over there. Go to my website, pipsofpersia.com. On the website over here, don't judge, I've designed it myself just to make it easier for you guys, okay? On the website over here, you can go ahead and click on courses and mentorship and see exactly what it is that we do, get access to, get full information about exactly what it is that we do. And if you want to go ahead and get started, you can go ahead and click on partner up with us and literally just follow the information to get started. So everything is available to you on pipsofpersia.com. Now, I want to go ahead and pass it to Vishal so he can kind of start to actually break everything down. Vishal, my bro, I'm going to try my best from my end to figure out exactly what I can do to help you put the camera on. I'm going to look for settings over here and etc. But I want to go ahead and in a way help you to be able to show your face to people as well. But with that being said, I'm going to go ahead and put myself on mute. Vishal, I want you to share the knowledge with people, and I'm going to try my best to help you put on your camera.
All good, bro. Thank you for that. Now, bear with me whilst I share my screen. So I'm going to go over a couple of examples as well myself. Now, the first one that I actually have for you guys is a buy scenario on Euro USD. Now, looking back, it was based on an entry on this Thursday coming up. Now, if we jump from just a bit about how I trade before. As you guys know, if you've seen Mehdi's Pips's videos on his YouTube, he's been more of a swing trader. I'm slightly opposite in the sense that I do more intraday trades. So I like to sort of get in and out of my trades at the sort of by the end of the sessions. So that'll explain why I don't really hold a lot of my entries. But with that being said, let's continue. So looking at Euro USD from the previous day's movement over here, we can definitely see that there was some sort of structure break to the downside. There was a bearish break of structure over here. As we can see, price had moved to the downside below this previous significant high low. So that is a break of structure to the downside. And then that would definitely mean for us that there is a valid area of supply in this top area. And on the 15-minute time frame, I've just highlighted this last buy candle before the main sell-off. That buy candle before the main sell-off, and that was the main supply zone, which I had marked up. So having that as the main supply zone for our potential, continuation of these sells, we want to see this continue to carry on going down. Okay, bear with me 1 second, guys. Okay, can you all see me now? I think the camera should be working now. Hello, this is me. I'm not just an emoji. But yeah, cool. So going down into these lower time frames now, let me go back to the markup. So here was that previous supply zone which I was talking about, thinking that we should be able to get some bearish movement, and looking at how price reacted into the area, into that supply zone, we can see that it did give a reaction. It did give a positive bearish reaction. It created, this high, this low, lower high, sort of lower low points, but it was still kind of consolidating, it's still moving sideways. And upon further sort of analysis, what we can see is definitely the same thing as what Mehdi was going over earlier. We've got these areas of reaccumulation taking out these areas of supply. Think about it. Supply is gonna, if supply is in the market, if it's shown to be valid in the market, price is going to be moving down from those areas. So you can definitely see the supply in these areas as price is moving down from here. But then we get to see this rally, base, rally formation, this reaccumulation, whatever you want to call it, it's there. We can see that this reaccumulation actually takes out this previous area of supply. And that for me is going to be my new point of interest for these buys. So having one entry in terms of that, then this all comes down to trade management again. So like Pips was saying earlier, we have one entry with a larger stop and having a TP, and this TP was based upon having a measured move of the previous impulse. I'm just looking to trade each impulse as I see it. So we have the same size impulse as this getting into the supply zone. And this, for me, was seeing a demand zone being valid here. So I want to see an equal size move to the upside. So we can see that impulse, retracement, impulse. So I want to be taking my profits up at this point here. So the first entry was based off of this area here for a buy. We had a good area for entry around the 1.19 level, and I moved entry slightly higher just to account for spreads. So that was one entry there. And then the second entry, if I actually go to the screenshots, so there we go, you can see the first entry there. And let me go to the next screenshot, and we can see as prices entered this area, we're getting that validity, we're getting that proof that Pips was talking about earlier. We're getting those lower time frame breaks of structure, and you can just about clock in this area there is a fractal reaccumulation happening in this area. Your preliminary support, your selling climax, automatic rally, secondary test, sign of strength, then it busts straight down for a spring movement. It takes out these little lows in this small downtrend that we're having here, and then we see a massive movement up. And actually, if we zoom in, let me see if I can zoom in on this. There we go. So zooming in, what do we actually have in this area? We've got another rally, base rally that takes out this significant supply. Takes out that significant supply. It's a reaccumulation. So having entries based on this general area, and this second entry was a market execution, so I got in slightly above where I wanted to. I was looking to get in, really at that imbalance fill of that base there. So that was the next entry, and then we can see how the movement progressed afterwards. So there are the two entries there. So we've got the first entry with the larger stop and the second entry with the slightly smaller stop. I'm going to show this to you guys on TradingView just to see how important this trade management is. So obviously the first entry is with the slightly larger stop just to make sure that we are in on the trade, and that did actually reach a nice 1-to-3 risk to reward ratio. And then this second entry, I was having my stop loss just below this point of interest, just below the main rally-based rally that we were looking at for our point of interest. So that was where I put my stop loss. But looking back at this trade, I reckon I could have, made a lot more in terms of the percentage on this trade. Having put my stop loss here instead, that would be at the bottom of the spring of this fractal reaccumulation in this area. And instead of, achieving, there was a 1 to 3 on this first one, and then on this second trade, we were looking at I think it was another 1 to 4. Yeah, it reached 1 to 4. If I had, the risk slightly higher at this significant point here, could have, achieved a 1 to 7.5 risk to reward ratio on that trade. So that was a little reaccumulation example on EURUSD. Now the next one I'm going to go over, I know Mehdi was saying, I'm going to go over US 30, which I am. So bear with me once I find that. Okay, here we go. So US 30. Now looking at the screenshots, the before screenshot I've got is on the 1 minute time frame. We can see that price is making this downtrend as we come down. So if I get back to the relevant markup, bear with me whilst I put it in replay mode so we can see it together. There we go. There's the relevant markup that we wanted. And for this US 30 trade idea, we had, this downtrend that we were seeing throughout the whole day pretty much on US 30. And, it was making lower highs, lower lows, lower highs, and lower lows. And then we start to see, these significant lower highs. So this point in particular, because this went on to create a further lower low. So I had this base area marked up. Now, if I actually zoom in on this area, you can see why I was looking at this base. So, you can see we have this rally, a base of about 1, 2, 3, 4, about 5 candles, which is probably the max I'd look at for, number of candles to look at within the base. So we have a rally, a base, and then a rally that took out this significant area where supply was present. Supply was present in this area because it created further lower lows. So let me also zoom out.
All right, that's about enough of the video. I think everybody gets the point. If you look at this setup, this is a 1 minute time frame, but it doesn't matter what time frame. The important thing that everybody should remember, because we all trade on at least a 4 hour. This could be the 4 hour time frame, and you get these highs, these lower highs. When the price comes up and it creates a base or an order block, that's all this is an order block that it's creating right before it breaks a high or another order block. You should always expect price to break out. You should always expect for price to run through that order block. And we can go look at examples on your regular chart. This is a giveaway. This is something that I look for whenever I'm trying to decide whether the market is going to go higher or if it's going to respect a level. So hopefully you guys got something out of these videos. All right. That market structure series, I always try to talk about it because I think he did a heck of a job. Pips of Persia breaking down market structure like that. It kind of allows, me or whoever else, who's trying to be an instructor or an educator or somebody that help a group along. He nails every piece of it, from the basics of what you expect to see all the way through the actual Wyckoff accumulation and distribution. And whether you know what Wyckoff is or know what it looks like on a chart, or if you just want to say supply and demand or rally or drop base drop, if you know what it looks like and how the market should behave in those scenarios, then you can always find a good setup. Do you have any questions over that video? We got 26 people in here. I know all 26 of us didn't understand the video to a level that we would like to understand the video. If you guys understood this, you're going to make a lot of money, you know, and money should not be the focus, but it's a result of you taking the trade and executing the trade.
Solidifying your craft.
Wow. One person said,
Like I always say, man, when the food is good, ain't nobody talking. But this is where we have our canvas, and we have to paint on that canvas. You gotta open up. You gotta be able to explain it, right? Not to the people around you, to yourself. 'Cause that's where it builds. And when we get together and we're having conversations, everybody's going to understand the dialect. So, you know, when you don't understand the dialect, obviously you're going to get wrecked. You need to know where everything is on your chart. You need to know where you are. You need to know how to map it. And you got to speak that, right? So this is our canvas. This is our group. This is our company. And you're only going to be as good as the company you keep. And we're going to keep it. So you're ready. Supply and demand, accumulation and distribution. That's where it's at. You got to know it. You got to prove to yourself that you know it. Once you got it, self-discipline, right? You only see what you see. The chart's telling you everything. It's like it's telling you a story. And you got to be able to decipher it. And it's the best job on the planet. You got people with a whole lot of money in this world that don't even know how to read a chart. And everybody here is pushing themselves to read charts. So you're at a huge disadvantage from other people in the world. Especially right now, what we're doing right now is pivotal because people are going to be swarming once they understand what's happening. They don't know how to trade. They think of it like, oh, it's so difficult. No, see, that's where we come in because we can break it down in layman's terms. And if we don't know something, we know who to go to find it. Shout out to YouTube University. And Pips of Persia. Hey.
so there are no questions. Okay.
Let's hit the charts.
I want to recap this trade, this GU trade that hasn't worked out in my favor at this point. But I just want y'all to understand what I look at. So, YouTube. If you go to YouTube, I'm gonna give y'all this free sauce. ICT mentorship 2022. Okay. If you go in here,
understanding about price action, how price is delivered, and how to read the bias on an intraday basis, a daily basis.
I don't know if it's video 3, video 4.
All right, folks, welcome back.
So this lesson's going to be a little bit shorter. And put some lipstick on this. Again, here's the low and the high. Equilibrium, which is a 50 level on the Fibonacci. So we're looking for a low or an imbalance below this level. Okay, so we have a swing low here. We have an imbalance here. That could be.
Okay, if you go and look through this mentorship, he will talk exceedingly about your lows and your highs and how to come up with your bias and the manipulations and all that good stuff. Okay, if you haven't watched it, do yourself a favor and watch it, man. Watch one video a week. However you want to do it. Maybe you don't appreciate his voice or his style, but from what I can tell you is the stuff that he's going to show you in these videos is unmatched. Okay, so let's talk a little bit about the trade setup. First of all, if we look at this on a 2-week chart, this is the setup that I was trading based on a 2-week chart. I expected a sell down and a buy up. Now, obviously, this never pushed into the zone, and I don't expect for it to push into the zone because of the news. But I expected a sell down and then a buy up. If you look at the rest of these pair, AUD USD, on a 2-week chart, it sold all the way down. All right. EUR USD, it made it to the 50 right here. So GBP USD. All right, for those of you who don't know and didn't keep up with the news, the pound, the British bank, the authorities, they raised
interest rate.
Yeah, they raised the rates double the expected price. Okay, so what I was looking at, if you go to this daily, and let me delete this candle. This is what we had on the daily, right? So we had taken out this daily imbalance, right? I don't expect to push down into this range on a daily. This imbalance doesn't exist, and there's really no imbalance here. So we have clean price action. On the lower time frames, there is an imbalance, but you see this expansion. We came back to our trend line, our moving averages. I expected price to push up. Okay, so this is what I was looking at on the higher time frames, and more importantly, we can drop down here to this 15-minute jank, and this is what I was looking at on the 15-minute. So if you understand the ICT concepts, right? 8:30 is always the time frame that he's going to tell you to go and look at. So I'll just grab this line. $8:45, $8:30. Look to the left of this 8:30 line and get your swing high and your swing low. Obviously, this was a news candle on some U.S. news, but this gave us something to look at. All right. And what I saw was price come down. We took these lows, right? So once we took the lows, and me understanding the news, I expected the move to happen where we move up. Okay. This was my THOT process on getting an entry. Now, obviously, I didn't get a 5-lot entry, right? And the trade, came back and took these lows further. I had a hedge at these lows right here, right? And my hedge picked up. And y'all kind of know the rest. But basically, we pushed down, and I think we ran these lows right here. Yeah, we ran those lows, and now this is where price is sitting, right? After we took these lows, I expect price to push up, take out this high, pull back, then we're off to the races. The concept is solid, even though the idea was a premature entry, right? But the premature entry was based off of good, off of solid, what do you call it? Concept. But the low that got ran was a lower low, which is cool, because I will get another entry tomorrow when we pull back. I'll enter again, and I'll have 2 different entries. And as the trade pushes up and it gives us the hard pullback, I'm not going to get a third entry until we break this high and pull back. And then I can probably rest on my laurels the rest of the week in this buy. All of my accounts don't have the same trades, but the similar trade ideas are in these, are in the various accounts. But just in case you were lost, or you didn't know, or you didn't see the setup real time, that's the scenario that I was looking at when this trade set up. So for those of you who understand the concept, but you can't put it into action yet, it's one thing to know the concept or understand what you're looking for, and it's another thing to actually see it and then be able to execute on it, right? In the Army, we used to call it technical knowledge and tactical knowledge. One is the ability to understand what to do, and the next is the ability to do what you need to do. So how to do it in real time, how to take action on what you're seeing. And a lot of times you're going to have very little time to make these decisions. You might have 15 minutes from the time you see a 15-minute candle form. So as long as you're making your decisions based on, the solid concept, right? And again, if I take the fib from this low to these highs right here, this pullback was almost to the 78. My entry was up in this area, which is cool. So if I fib this move up and pull back, which is about a 78. So it's solid, sometimes you're going to lose trades, but this is a solid entry. And in the big scheme of things, price is going to go up. So this is a reason that I'm glad I'm a hedger and not a loser, because even though my hedge is activated, I'm going to be able to take profit or break even on my hedge when we pull back, and I'll be able to get a win on my original entry and my second entry. You guys have any questions? Anybody see anything different?
What's important about the 78? You mentioned the 78.
Okay, so that's a great question. What's important about the 78? So if you study ICT, he'll tell you that that's his optimal trading entry. And here's the important thing. Equilibrium is what we're waiting for. A pullback that hits the 50 can go forward, to the next level, right? It can break structure. The 78 is a good area. If it pulls back to the 78, it only has another 20% pretty much before it's 100% pullback or a reversal. So a 78 gives you a good target area to aim for, to look for the trade to push, to continue on in your direction. And in this case, we talk about this number at the 78, and the number is great, but more importantly, you need to look at the structure, right? The significant thing about this 78 is you have an imbalance. This big candle right here, this wick of this candle and the wick of the candle prior to this long candle, those wicks need to touch. And since they don't touch, this entire candle creates an imbalance. So in order to close this imbalance, price needs to come all the way down, right? Which coincides with the 78. So that's what the significant thing about the 78 in this case is, right? And that goes with any trade that you're looking at. Let's look at GBP NZD. Okay, we see how price has broken this high, right? If I take this move, this impulse move from this wick to this wick, and I want to target the 78, right? This is the 78. What's at the 78? You have an order block, right? This order block is a good area to look at if price comes back down to this order block before it goes up, which who knows if that will happen. I'm not thinking that it will, but if it did, this is why. It's not just that it's the 78. What's at the 78? This provides a good target for price to push up. Does that make sense? If you look at these price points, though, it's pretty clean price action, and there's no reason for price to revisit this 78. So in this particular case, this 78 probably is an unrealistic target for this pullback. So you just have to kind of wait to see why price is pulling back. Does that make any sense?
It does. Thank you.
Okay. There's still a small imbalance between this candle wick and this wick. So this price could pull back into this area to fill this imbalance, which would make sense because your moving averages are right here too. So it can come down and then it can go higher. We have to take the information that we have on multiple time frames to piece together to make us a complete picture. What do you mean by that, Todd? Let's look at the 2-week candle. What are our expectations? I'm going to delete this fib. So from the looks of this, we had this 2-week bullish order block. We had price pull back for this 2-week candle. And on this 2-week candle, we expect price to expand up. So that's what I expect from that scenario. If we just look at this weekly candle, right? From last week's candle, we had a bullish order block, right? Red, green, and goes to red. This is a bullish order block. What do we expect? We expect price to come and push up. What do we get? We got exactly what we expected. Price pushed up, right? So the only thing that I would like to see happen this week, if I fib this weekly candle, there's a great deal of retrace that happened already, right? So maybe price comes down to this blue, to the top of this blue area, or this 50% zone, and pushes up. So when we drop to that 4 hour, this is the exact same scenario that we already talked about, right? On this 4 hour, we fibbed from this wick to the top of this wick. That's our 50. The same one we did on the 4 hour, right? And we talked about there being a little imbalance right here. That's where I expect price to hit. Then I expect price to push higher to finish out the week. I'm just piecing the information from all of those different time frames down to what I expect to see on the 4 hour. Now here's the important piece. That's what I expect. The market can do whatever the heck it wants to do, right? It can do whatever it wants to do. But the kicker is I don't have to trade that freaker. You know what I'm saying? If it does something that I don't want to see, I don't have to take the trade. Okay, the last thing that I want to talk about, let me delete this fib. We just got finished looking at the market structure video, right? You have accumulation down here. Price pushes up, comes back. Y'all would call this a retest. This is just reaccumulation, right? And you can call this the spring right here. We broke these highs. We pulled right back to let you in the trade, right at these highs. Now we broke structure going to the top side. We expect it to come back and break structure again, going to the top side. All of this, wherever we go, you know, we got to look way over here to find a target, I guess. Let me change it to the daily so I can see the daily targets. However high we go, right? We might go to this order block. We might go to the wicks, right? However high, whatever high we reach this week, however high that may end up being, at least to this wick, maybe a little bit higher. Let me just draw a line for the people in the back. Let's say that this is the next candle and it ends up this high this week. Now, y'all know that this is going to be the end of the month coming up. So this is what we're going to look at. You know, we might have this type of situation going on at the end, by the end of the month. So for all these months, we push way up here, right? Look what happens every month. At the end of the month, you get a pullback. Price goes higher. End of the month, you get a pullback. Price goes higher. End of this month, you get a pullback. This is a super pullback. Price goes higher. End of this month, you get a pullback. Price goes higher. It's probably safe to assume that at the end of this month, we're going to get a pullback. Even if this pullback just keeps going, right? Because eventually, guys, y'all know just like I know, eventually we got to come back and touch these moving averages. So it's just something to keep in mind. This is how I look at the market. This is how I anticipate it and, you know, have expectations or whatever. And if it doesn't do what I think, or if it's trading differently than I believe it should be, then I find a different pair. You know, every pair ain't for you. Just like relationships, it all, you know, everybody ain't for you, and this is no different. I don't know how high we'll go up this week. I do expect for us to go high, you know, but I don't know how high. You know, maybe it's 500, maybe it's 250. You know, who knows? But that is going to directly impact the pullback, right? As we go into the week and towards, this is the last week of the month, I don't have to trade GN next week when I look for a pullback, because there are other monthly candles that gave us 925 pips so far. So this goes a little bit higher, which I expect for it to go a little bit higher. Maybe this is a 1,000 pip candle by the time the month is up. In the pullback, maybe the pullback is 500 pips. So always look at your time frames and look at the direction from the higher time frames, right? The higher time frames are going to give you the information that you seek. So all these British pound pairs that are just on a tear, you know, and they raise the interest rates even more, they got to pull back, man. They got to pull back. And that's where we just wait. We sit down here and wait on the lower time frame, and we can catch a pullback when it crosses over that moving average. Now, I mean, we've talked about this in great detail, you know, on how we view this 4-hour chart. So let this thing run up, and then next week at some point, you know, it's going to cross back over that 4-hour moving average, and then it's going to be on and popping, because all these levels of imbalance that were not mitigated going up is going to come down, and it's going to pay you these same levels that we can target, these levels of imbalance on the way back down. Are there any questions on that?
Todd, can I add something on GBP USD?
Sure.
Okay, you want to pull the chart up real quick? Okay, so unless I missed this, you said that you seen your 4-hour bullish order block, right? And you're expecting it to go make a new high and catch that?
Right. Eventually, yeah.
Okay, so I agree with that, but I also do think that there's also an option for price to buy up just to retrace that weekly candle and then continue selling down before it goes up and makes a new high. So the reason I say that is because price never retraced to the fib levels that we look at on last week's candle. And also, if you hit the 2-week candle, there's still a lot of room for it to retrace down as well. So it could go either way, but that's just another option that I see.
I agree. I think that is an option. I don't think it's realistic, but I think it's an option. Here's what I mean by that. Rally base. I believe we'll get the rally. Now, I believe this is why I believe that, right? This is why I'm more biased towards what I was saying. And it doesn't mean that it's going to be right, but I'm more biased towards what I'm saying is because I think we're going to get to these levels, and that pullback is going to happen on the monthly pullback. It's lining up that way. If we get the pullback now, then what is it going to pull back? What is the monthly pullback going to be for? You know, I just think that from my past few months of trading these pullbacks, that generally it'll do its last little run up. Now towards the end of the month, you know, like maybe towards Friday, it'll start pulling back and giving you that wick, the top of the wick. But the candle should be way up here somewhere where it gives you the top of the wick. Then you open up that monthly candle, you'll get a pullback into the zone, the one that we never retraced to. And then it'll start pushing back up. That's just how I look at it now. You know, your scenario could very well play out. There's no doubt about it, no doubt. But just from trading these previous monthly candles, that's in my opinion, it's a higher likelihood that we push higher immediately, and especially based on this 2-week chart, because all this is a pullback into the range, and we're going to go higher. So we have to remember that if you look at the rest of the pairs, AUD USD, if the dollar continues to get stronger, this is going to break down, right?
Mm-hmm.
I think this has reached a good level. I think NZD USD has reached low enough, and I think it's gonna go higher too. I mean, we'll see.
Yeah. Yeah, I agree. Also on the because we're talking about Wyckoff. So on the 4 hour on GBP USD, I see like kind of a crooked distribution. And so that wick that went up to me is the, do you call it a spring on distribution?
Which one? The
So
one
that wick when they raise interest rates,
uh-huh.
right? So it goes up, it grabs that liquidity, and then we could see a test of that spring, right?
Right,
So
but
we could see a test of that, which would be the retracement, and then it continues down.
but here's a problem. Here's the problem with this thing. It didn't grab the liquidity.
Yeah, you're right. It didn't.
It made relative equal highs, which
Mhm.
which is basically a target. So
Mhm.
we're going to at least grab liquidity from the tops of this. I think, from my previous analysis, we have to get to this level at least, right? Preferably that second higher level. You see all this imbalance right here.
Yep.
So this is my first level that I think that we'll absolutely get to. Maybe even the second level or somewhere in between these two, which would be cool before we get a pullback. I think that on the higher time frames, I think that we're supported. I think price comes down, test the moving average. Price comes down, test the moving average. Now you can get a green candle that just pushes up. Again, this is just expectation, and it's not. I don't necessarily have to be right, but just based on what I'm seeing, we rejected moving average. So we'll just have to allow the market to play out. Now, if the dollar comes out and it has great strength, then, obviously I would play it for a bounce right here. But it's just not something that I see.
Yeah, I also think the dollar is going to sell as well. So either way, I mean, price has been moving super bullish on a lot of charts, like crazy.
Yeah. This dollar rejected right here at the moving average too. So I mean, we'll see, man. It's everybody has. That's why I say everybody has to do their own analysis. And for me, it's not about being right or wrong. It's seeing either side. So
I'm ready for both ways for sure.
I'm gonna make money regardless of which way it goes. But I have my I guess my bias, just see how it works out. Whenever I did this dollar analysis, this pulled back to the 78, got it going to the negative 27. All of it, it's lining up so far. So I mean, we'll just have to see,
Yeah. Euro USD as well, I think is also gonna sell. I mean, it reached its levels on the monthly candle. I do know there's highs that it could go up and grab possibly, but if it does end up selling, then it's almost the exact same thing that I just pointed out on GBP USD.
Yeah, I don't think it's gonna sell. But I think this is a retracement to take. I think we're bouncing off this line. I think it's going higher.
Yeah, I mean, like sell down to where you have that. Is that like a trade idea, or is that something you're already in?
I've been in this. Yeah,
Okay.
I'm in this trade from here, but I believe that we're going to push up higher than where we are now. I believe we'll get higher than this level.
Mhm.
Again, I think this is going to be a rally base rally.
Mhm.
And eventually, I think we're going to visit this area.
Yeah, for sure.
But if you look at the monthly candle, this is probably the worst monthly candle for the.
Why?
Well, it hasn't went anywhere. So think about this. Every other pair, I know we're going up, right? And our moving averages are below. We need this price to extend out, or your monthly retracement. Like, there's no way that we're not going to break this order block. There's no way that we're not going to break this order block in a week. That's I don't know what kind of news events are coming out, but I think that we have to finish. This has to be a bullish order block, in my opinion. So we need to get 205 pips, 209 pips this week out of EU. I believe that this is going to be a bullish order block on the monthly. We'll see, but I think if you look at the rest of the pairs, rest of the pair against the dollar, I think you're going to see the same thing.
Mhm.
And it'll support these higher lows, low, higher low, higher low. So we need the higher high now.
It's a good point about the rally-based rally, and the fact, it's just like what we do on a weekly basis. The week is going to end on a sentiment, right? And we ended on a weekly bullish sentiment on most pairs. So it wouldn't make any sense to try to catch a sell at the end of the week. And it's the same thing with the monthly candle. That last week of the month, it's a bullish order block. Chances are you're going to be in trouble if you try to catch any sells, because there's not enough time for it to be a sell. You have to wait for the next candle, right? So we do that weekly. That's natural for us. When you start going up to them other time frames, you got to treat them like you treat your weekly candle and your daily candle. Like, what's the sentiment of the day? What's the sentiment of the week? What's the sentiment of the month? Right now, it's a bullish order block. It's not consuming, but this is where it starts. It is bullish. So the next candle is going to determine if the sentiment is bullish. So now all it has to do is bypass the previous candle's wick on the monthly, right? So, and they don't have much distance to go up. See, so it has a whole lot of distance to go down, and it's probably not going to do that at first. I mean, we'll see. I mean, if it does go down, it's going to the base of the monthly candle. But it's going to take a lot for it to do that. And news is going to have to help that. We do know that GBP raised their interest rates. That is a bullish signal. So when you add all that stuff up together, you base it off the candle that you're on. If it's bullish, then you play it as bullish until it turns bearish.
And check this out. This is another thing. If we look at this from the higher time frame, if you fib this move that broke this structure, right? The pullback, this is a 78% pullback, right? Right at this order block. Right now, we just hit the 50. All right, now let me remove this fib. We already know the 78 is up here. If I fib this move, right? Like from when this pullback here, if I fib this move, this pullback is gonna, this is what gave me this entry over here. There's a 78. Bam. Now the negative 27 is here. Right where I think price needs to go. Remember, these are two-week order block or 2-week candles. The first week, it bull crap. In the next 6 days, this candle needs to push up. And I think that that's what's going to happen. I think we can see that we created the lower wick. Now price is going to go higher.
I do want to bring up, just like what he was saying in the video. about distribution across the top, and then it goes and wicks up and grabs it. So I get it. You got to understand both sides of it, and that's true. It is a good sell point, but the big picture, you know. So according to what Pips of Persia shown in that video, it's supposed to go up and grab as soon as it broke that neckline. It went up there and grabbed it, and then it should drop it lower. But it's a sell to buy. So if GU does happen to drop, because we still have, it hasn't touched the 78. It should touch the 78. So we got a couple days for that to play out. But ultimately, once you get that mitigated, it's probably going to take off. And remember what happened with Aussie, because when they raised their interest rates, it was automatic. So that's why I'm a little disappointed, because I thought when they raised them, it was just going to skyrocket, but it didn't do that yet. But it's setting up. So if you are going to try to catch a sell, you're selling it to buy it. Don't get wrecked.
Oh yeah, definitely selling to buy. We'll see though.
Yeah.
We got that hedge going. It's good.
Yeah, my hedge is set. Well, no, it's not. I'm at the 78. I could put it in right now, but I took a couple losses. It's okay. But the dynamics and the scenario looks perfect. So hopefully it does touch the 78. If not, I'll trap it eventually if I have to market execute that thing.
Hmm.
I don't know if you noticed too about, you know, as he was going through those videos, anytime somebody shows me a chart, I'm always looking at the quarter levels of interest. And all the quarter levels were just, you know, they were talking about their entries and all that, but they didn't talk about the quarter levels, right? See, I be thinking quarter levels. I know what he's talking about, and I'm adding quarter levels to it. So when it makes sense at a quarter level, I'm already dropping the sauce on it. So,
Barbecue
oh,
sauce. It's
oh
barbecue.
yeah, oh yeah, oh yeah.
Hey, Alicia, I don't care what you think, girl. You ain't gonna take the trade no way.
Okay. Okay then.
You know I'm messing with you. But hey, I'm gonna focus more on EN and GN, I think. And once GU takes off, then I'm gonna load up heavy on it, because to me the GBP pairs are going to move more volatilely because of their interest rate. They really, man, GA and GN, man, that paid so much money, man. Y'all, whoo, the same day that this trade bull crap on Thursday, man, let me just show y'all, because I know y'all, I don't know what y'all was doing. Twiddling your thumbs. Picking your numbers, you know what I'm saying? Look at this. Look at this Thursday. Look at the Thursday meat that I was doled out. Look at that. Oh my God. This is Thursday, right? When they raising rates. Look at the pippage that this thing paid. I'm just gonna start about right here. Oh my God. Y'all didn't want them 233, man. Y'all, I should have gotten out. I didn't get out, but I might when the market opened tomorrow, I might get out because it's gonna pull back. But I was just like, I couldn't believe the speed, man, from these moves. This one rolled back a lot further. That was 197. This one rolled back. This is a 93. I'm not getting out of this one because it pulled back far enough. I believe that this is going to push higher based on the 2 week. I know that y'all don't look at this on the 2 week. Check it. So we just have to pull back maybe a little bit to this candle. So we might get, I believe on London session, this is going to take off again. I'm still in both of these. I got in this one down in this area somewhere. But I think I'm gonna get out of GA and let it retrace. This is what I thought the GU was gonna do. And then, of course it didn't. So,
Hey, it's wavy.
hey,
It's wavy.
exactly. We know, hey, it's gonna happen. It's gonna happen. And I'm gonna get all of it. I'm still gonna enter probably tomorrow. And when it goes and breaks that high, I'm gonna have my third entry, regardless of whether Rose play or not. If Rose's situation plays out, then I just have to double up on that sell.
It's just a retracement. I mean, that's what it's doing. Yeah. And that's the beauty of, you having all the GBP pairs, right? You figure out which one's ahead of everything else. Everything is going to do the same thing. You just got to catch them at the right time and then let one give you a heads up. And then you go into the other one. Obviously it's against a different currency, but ultimately it's because GBP raised their interest rates. That's what, and GA, they both raised their interest rates. See, it's at the highest point. So fire.
It's wavy, baby, just like them chips.
Right.
Anybody got anything else?
Oh, I wanted to mention the bailouts for the banks is coming. They're already talking about it. So what happened when they raised, or when they printed the 800 billion, I think 600 or 800 billion for the preliminary bank bailouts in March. First of all, Bitcoin spiked to 30,000. Whenever the banks are in trouble, Bitcoin goes up. And obviously, if they're printing money, it's going to drop the price of the dollar. Right. So we got 101, 750, I believe, was the low for the dollar. It's probably going to go down to $1, 100 even. It's a good bounce point for the dollar. So once they print that bailout money, it's going to make the price of the dollar go down, and that should make the market go up.
Should be gold should be on the climb.
Heading to 2100. Yeah. You can catch a sell at 2100 on gold, back down to 2050, and then trap it, sell it to buy it, and then let's see if we can get to 2250, 2500.
A lot of money to be made, man.
Right.
Anybody got anything else? Speak now. Forever hold your peace. All right, well, hey.
Have you looked over US 30 yet?
No, I haven't. You can share your chart. You can look over US 30.
I haven't got my laptop present.
Whoa! Shame on you.
We can look at yours.
Where's Ant?
Pardon?
Say, where's Ant? Yeah, I'm not.
I'm gonna get in his ear. He needs to be heard. He definitely needs to be heard.
Oh, is that his name?
Yeah, Mr. Skinner. I haven't seen him miss. He is in fuego on US 30.
Yeah, when I look at his charts, me and him have the same setup or very similar.
It's a beautiful lane that you guys have because everybody wants to trade that. You guys can specialize in that, and you guys will, telling you, you can make some money off of that on your analysis. It's necessary. People who know how to do it.
It's a necessary evil.
Not. So
All right, Crunch Bear.
So Todd, can I ask, why was you looking on the 2 weeks if we're coming up to the end of like the last bit of the 2 week now for the end of the month?
Because I want to see where we came from.
Okay.
You always, whenever you get a new candle, you want the retracement of that candle. It may not happen, but you need to look at it because when it does happen, you'll be in perfect position to catch it. Do that on the 4 hour, you do it on the weekly, you do it on the 2 weekly, right? And you just start walking it down.
This weekly has a ways to push up too.
There's a bearish order block on the daily.
I understand that. It's a bearish order block on the 4 hour too.
It's visible on the daily. Take care, Rosebud.
Rose says she ain't trading this hot garbage either. Okay, that's just
Yeah. Right, the golden zone where the
back is right there at the base of that.
yeah, that looks nice. How many pips is that to that golden zone, please?
It's 10.
What, 10 times 10?
This is the point. It's points to the golden zone. It's about 250, 254 to the zone.
Nice.
But it's going to drop a little bit more.
100%.
Probably going to drop to this area. Maybe these lows. We've rejected from this area right here already. I would expect for it to do it again, retest.
Yeah, I was just about to say, because there's back-to-back bullish order blocks there, you need to look on a higher time frame to see if there's probably look on a higher time frame, not a lower time frame.
No, lower is good right here. This is the area I would look for a price to turn. This is already.
It's already rejected time already.
78. This is probably a 78. So maybe, I mean, I guess there's a possibility that you just get a green candle. It makes a bullish order right here. And then a pullback, and then it breaks through these moving average. But if you can get price to push down a little bit, that'll be awesome too. I don't know if it'll revisit, but I would definitely look for that.
Anthony's so saucy with it. He has a buy and a sell running at all times at both sides of the spectrum. And he chips away off of his buy and he chips away off of his sell. And he keeps it going. It's insane what he's doing right now.
Yeah, that is crazy.
I have that on a demo, but I don't have it on a live.
Why not?
Not that advanced to have both a buy and a sell going at the same time. If you go to the 2 month, here's.
You needed the pip core. You got the pip core now. You about to get dialed in.
See price rejected from that bullish order block. And I've got 6 days left of this 2 month. Can you go on to the 3 months, please?
No, we have a month left on the 3 month. You need this week to make
To
this.
go above those highs. Yeah.
Yeah, and I think we'll get it. I think
Can you
this
go through-
this will be a bullish OB.
Lovely. Can you go to- okay, thank you.
Yeah, and there's the 3 month, which means
Maybe it's the 6 month. Go to the 6 month.
sweet Jesus, man.
Because I'm sure, I can't remember if it's Effie that said, yeah, there we go. That's what I need. At the top of that bullish wick, hopefully price should enter that bearish order block. That says 35200.
Rejected the bearish order block.
Huh?
Rejected the bearish order block.
Yeah, above that wick of that green candle.
No,
Is that 352?
already tapped in. It sold down. Now we're buying back up.
Yeah.
The bearish order block in this scenario doesn't mean very much.
Okay. So it could easily run past that area.
Yeah.
Is that what you're saying?
Well, it's not.
It's done it every time.
Yeah, look, man. Your moving averages are below. Bearish just brings.
Can't see. You need to zoom in a bit more. It's very tiny.
Well, if you listen to what I'm saying, I'm gonna paint the picture for you.
I can't see the picture. That's what's
So just trust me when I tell it to you. The bearish order block is only there because it's bringing price back down to the moving average.
Mm-hmm.
This is an uptrend.
Yes.
So until you break through the moving averages, your price is never even challenging any of these lows. The only time it came close was the pandemic. Right?
Mm-hmm. Pandemic.
The rest of the time, it's just touched the moving average. So I do expect for this to break the highs on the 6 month chart. I mean, even though it won't happen until the next 6 months, but if you think about this, the last year, these are 2 6 month candles.
Mm-hmm.
As bad as things got, as high as we've raised interest rates 12 times in a row, something crazy. We still didn't break the moving average. That's everything you need to know.
But you saying that just then, so you're saying we still need to wait for another 6 months to see if it, actually goes above.
Oh, what I just said was it's going to break these highs. That's what I said.
What? Yeah, I know. But you said we still have to wait for the other 6 month candle to do that.
This is.
But I'm just saying this one could reject and create a wick, and then the next candle could pull back. The next 6 month candle in July could pull back, and then cause a wick on that candle.
I believe.
And then accelerate higher.
I believe when the next 6 month candle open, it is going to go down first.
Yeah.
But it's going to go up.
Yeah. So we could get a bit of a rejection.
I don't believe that you have to be a rocket scientist to understand that. The thing that drives the commodity prices down is raising interest rates. We've done it.
Yes.
So
we're ready for the plan to go.
Yeah, we're going to go higher.
Mm-hmm.
It'll probably never go lower because you're going to need 2 bearish order blocks in a row. Exactly. And I don't think you're going to get that.
Yeah, unless some idiots run planes into more buildings at some point, and then it'll still end up being a wick on these higher time frames.
Oh gosh. Oh, thank you for that. Thank you. Because what was SPX and NAS saying?
Same thing.
They normally correlate.
Same thing. Sweet baby Jesus. What are we even talking about that crap for? They're all the same.
Okay.
Look to go.
No, it's okay. Don't worry. I'll look at my own chart when I get time.
Ah, sweet. Baby Jesus, thank you.
Okay. Just don't complain when I show you certain things.
Don't send me no profits. Just know, just understand it. It's all good.
I know you can't handle it.
Who?
You.
Why would I be able to handle it? Perfect, perfect. There you go. There you go. It's awesome. We're going higher.
Thank you.
Going higher. Hey, as a matter of fact, since you're crying.
So how come on SPX you said straight away this is going high? Is it because of the doji?
No, it's because of what I just told you.
Okay.
The only reason that the indices go lower is because of interest rates. We're finished.
Are they? What said to Powell on when he was doing his Senate testifying, he said they're still going to raise interest rates.
Okay, but they're not raising them 12 more times.
No, he said probably 2 more times this year.
Exactly. So that's it. I mean, the market has started going up. We raised them 12 times. So if you remember at the beginning of last year, remember the market went down?
Yes, because we raised the interest rate so much. Well, we're expecting to raise the interest rates.
But it turned around at some point and started going up.
Mm-hmm.
So that tells us everything we need to know.
Yes.
So this is the song that's dedicated to what the US 30 in London. She's so
Can you stop recording? Can you stop recording? I don't want this video to get flagged.
Hey.